Well, hello, everybody. Welcome to Monday. Really fantastic day today. Green shirt day all the way. 2.4% for the S&P 500. Actually, the best one-day return for the S&P 500 in the last 9 months. And what's really incredible is that I spent a vast majority of this weekend reading through all of these different pieces, looking at the data and what have you. And the majority of the consensus that was out there was that the market was going to be going down further, that you should be selling some of your stock, gathering some cash or some short-term bonds or those types of things. And, they might still be right, but it is sort of the difference between this kind of predictive concept and this reactive concept. And I think this is one of the keys to kind of my success with this. And let me show you, kind of what I'm talking about here, just in a little bit more detail, give you an example. So this is a great holding that we've had off and on for a long time. This is iBuy, which is online retail. It was up 4.4% today. But I have my alert, stop loss signal right here. And you can see it got very close to that a few days ago. And it's been bouncing around. And here where it was on Friday, So obviously it could have triggered through here. Or I could have looked at this and followed all those articles and sold it this morning to go into a more defensive position. But my methodology is to wait for things to trigger. Now, we did have a lot of things trigger a couple of weeks ago, a lot of the clean energy pieces, and we did make changes. And those fell further than where we got out. So I was pretty happy with those. But this, keeping here and holding on to this obviously worked out. Now, maybe it falls back down, but reactive methodology, okay, just has a few basics. Number one, I have to let it come down some. So that's the difference. If I was a predictor and good at it, I'd be out here or out here, okay? But I don't have that model. So reaction means I need to let it fall a little bit to see what kind of trend. And then I pick some intelligent places where I see, volume and what have you to put in these stop losses. And then past that, the only other time I really want to react is if this thing just continues to underperform, maybe go sideways for quite a while. I have other, waves to surf here that we can get on that might be more powerful. But this one is doing quite well right now at this time. So I do think that's what kind of helps in these really crazy markets. Put in your lines in the sand. And when your positions get past that, do react, have a plan, go into the pieces. I already knew where I was going to put that money if that did get triggered. And if it doesn't, great, just ride it and let it go. And until it really just kind of underperforms, if that happens, that'd be another reason to react. So either falling down or not, or underperforming the market as a whole, or some of these others are two reasons to react. The constant prediction portion, and this is what the news has got so much of, and even I have to fight this constantly. And I'll do little things, okay? When I see certain things, I want to make little adjustments based on my own feels and predictions. But for the most part, I wait for the big things to happen based on what happens in a reactionary standpoint. So I do think it's, worthwhile today, especially to kind of point that out. It's what keeps me out of trouble, keeps me from running off into the wrong directions. Just draw your lines in the sand and figure out where you want to go, when things do happen. And so we'll see. Now, today was very, very powerful. That's super important. There should be some momentum behind this. And it was powerful because the bond market stabilized, which is great. I think they're overdoing the inflation threat, especially long term. But secondly, manufacturing had hit a two-year high, the report that came out today. So there's like real economic fundamental reasons that the market's doing well. And I've been talking about 2021 being, a good year. So far, kind of iffy. We'll see what happens, but we have a long ways to go. And I still think the basics are here for what could be a fantastic year altogether. And you can see the power today. You see the money coming in. Very, very powerful. So look forward to seeing what's going to happen tomorrow. Thank you very much.